There are over 70 insider trades filed, and we looked through all of them to find the highest signal ones that can help us outperform. Let's take a look. So as we mentioned, we're getting close to earnings season, so only 70 insider trades is actually quite low. As you can see here, we're going to be at this below 100 number for the next few weeks as we're entering earnings season before we get back up to, our 200-ish range. So we'll expect it to stay pretty low. We'll also going to expect to see fewer buys because they can't make discretionary buys. We actually had a decent ratio come in though yesterday with a more buys than normal, slightly above 22%, slightly above the 18% or so that we've been at for the last few months. However, kind of over the longer time frame, we normally are more at that 25% range in terms of the total number of buys and total number of percent of trades that come in that are buys. So we've actually been pretty low for about basically for the last 3 months or so. We've actually been a little low. So insiders being maybe a little bearish, but nothing too crazy to worry about. So anyway, as we mentioned, pretty low on, we're going to have much fewer insider trades coming in, but we can still find some interesting ones, and we'll head over to CEOWatcher.com to see what we can find. And right now, especially if you start to see some discretionary trades come in, i.e. some unscheduled trades, it gets even more interesting to take a look at them because we are getting close to earnings season, meaning earnings are fully baked at this point. So anybody or pretty close, especially if their earnings are in October, by the end of September, that's going to be the end of their quarter. So their earnings are pretty baked. So any insiders or directors that might have some knowledge about how the quarter is going, if they're making trades right now, they're fitting it in right at the last second, and they should have a pretty good idea of how the quarter is going to end up. So it can be a pretty good signal. So let's take a look here. Starting at the top, we have Stuart Zimmer here, a director, 10% owner at Integrity Specialty Insurance Company. Looks like a pretty new company, a new IPO. New IPO as of beginning of June. Just not much for us to do, frankly. This early in an IPO, there's so many moving parts. It's pretty hard. Just not a game I'm very interested in playing. So that's a pretty easy skip for me, as there's not much I can do. Now, let me sort. I forgot to sort by transaction value, make our lives a little easier here. What else do we have here? Another one that's not very interesting to me, just this big 10% owner. I'm not a huge fan of buying 10% owners here. I'm also not sure there's just nothing. This chart is kind of wacky. I'm not entirely sure what's going on here, but I tend to skip these sort of really big 10% owner purchases, especially unless they have like really crazy good returns. Like, we were buying Ace of Gold because of capital. Occasionally we'll do it, but for the most part, I don't find these 10% owners, and just the data states the 10% owners are the least interesting because they're normally funds. You never have any idea what they might have to sell to give money back to LPs, or there could be a million other reasons why they're selling a stock. We'll also see here, it looks like there's some sort of cumulative, some convertible, Series B convertible stock situation going on here. Just not worth the time to me. Here's another one we've looked at a couple of times. It's kind of interesting because this guy's buying quite a bit of a stock, but as we look backwards, he's been buying a ton of stock before and times it terribly every time. Now we have somebody else joining in, another probably executive would be my guess. Yeah, the chief operating officer joining in, who, same thing though, just terrible timing, just not even gonna look into it because of both because they've been so bad historically, but then also these kind of capital companies, finance companies aren't super interesting normally. Not often very many big moves in those kind of companies, which we like to try to take advantage of. Now we're getting to a little bit more interesting here. We've got Ton Strategy Company, which is just some crypto treasury company holding ton reserve, as you can see, Ton Coin, whatever that coin is. These companies, to me at least, these are actually kind of interesting because now historically we can look back at kind of purchases. There's not much. Obviously this company's a total disaster, down 95% in the last 2 years. There's not really going to be much to see here. It looks like somebody was both buying and selling, so I'm not sure what they were doing. Probably just switching. Yeah, I don't really know why. Normally you're not. I guess we can go look real quick to see why you would be buying and selling. So there's a lot going on here. All sorts of buys and sells. Let's see if they'll tell you why, or if we could just look here. All common stock. Yeah, I don't know what they're doing here. Filed by. I'm not sure if they were just moving money between different holdings, entities, or funds or whatever. But so I don't know. Those kind of buys and sells at the same time are hard to figure out what's going on. But we can then. So this is this guy's first ever purchase. He is, I believe, the exec chairman. I don't think it actually tells us here, but in here it'll probably tell us. He is the issuer's chairman of its board of directors. So we've got the chairman buying this kind of reserve strategy company, which is always, to me, like I said, those crypto strategy companies they solely exist to just pump the stock. Like they're not doing anything. They're not providing any value. They're not trying to build any product or anything. They literally solely exist to pump the stock, which is kind of an interesting setup. As you see insiders buying, they're going to be pushing for, the chance of them just basically putting out new press releases and things to try to pump the stock is very, very very high. So I think when we see insider buying, I think it makes it interesting because, could be hinting at them, trying to make some more shots on goal at pumping the stock, which as you can see here, so the stock is down so much in the last, it's hard to see, but they were down slightly flat through the year, had gone down and come back up. Then they went from somewhere, about $7 range all the way up above 20. So they're up 200% after announcing basically their crypto strategy move. They gave back the entire pop that they had there from the initial announcement. So now we're basically in wait and see mode to see if we can get them to put out some more press releases that might move the stock. On top of that, they did actually just recently mention, so they have 82% of its ton reserves are staked. They solely exist to pump the stock price. They're putting all the money just into share buybacks. So they're literally staking Toncoin, receiving, receiving the money from the staking, whatever they call them, the interest or whatever you want to call it, receiving that money and then using it to buy back stock. Totally a stock enrichment scheme. Let's see if it works. That's kind of all there is to it. I mean, that's the whole pitch. Sketchy stuff at crypto treasury companies, and insider buying maybe hints towards more sketchy stuff going on, and why not be for the ride? I also think these are a little tricky so I personally hold a handful of different of these crypto treasury companies that have either popped and fully retraced or just haven't popped yet. The whole play is just like, okay, maybe they'll announce some press release and we can get the stock to pump 100 or 200% and get out at the same time. But obviously very risky because the stocks are totally useless. So, I mean, the stock is probably going to fall 20 or 30% a year just because they're totally useless stocks. So that's kind of the risk you're playing with, is the longer you hold and nothing happens, that stock's just going to drift downwards, and you hope something like this happens and you can cash out for 100, 200% gain. But that's literally the whole game. And so that's why I think anytime you see those crypto treasury companies and you see insider buying, I think it's pretty interesting. Just their stock enrichment scheme. So kind of interesting to look at. Now we've got a couple of REITs here, which this is another sector that I just don't really play with much because I don't know as much about it. It's also a lot harder to get, depending on what platforms you use, it can be a lot harder to get. I'm not even going to go through it right now, but it can be harder to get like valuation data and stuff, just because Koifin, for example, that I normally use to look at a bunch of the data, they don't really easily give you, the valuation metrics you would want for something like a REIT. So hard to know, like, is it undervalued? What's going on? The stocks also don't tend to move a ton. They tend to be very heavily, very high dividends in the stocks, not huge spikes or dips in the stock. So I just tend to avoid them. However, there are two, if that's an industry that you know more about than I do, I think there's a couple of interesting ones here, which one would be this Michael Landy at UMH Properties, solely based on this guy's history of buying the stock. He's timed them pretty well. However, so you see purchase down here, and sell up here near the top. The downside here on the insider trading front is all of this selling going on. So the stock obviously has no momentum behind it. So you're playing some sort of turnaround. You're hoping for some reason something is going to go better for this company. And you can also see a dude with the same last name, who I have to imagine is related, has also been selling the stock, which is just a real bizarre situation where, like, presumably, so it looks like one brother is probably the CEO and one brother, or the dad or whatever it is a director. Very odd to see them taking opposite sides of the coin. So just based on the price action and based on the insider buying and selling, might stay away from. That's probably a little bit into the too complex pile. One that's probably a little easier here is this. So is this Dynex Capital, with a couple of insiders buying the stock here. So we've got, I believe they're both executives. Yeah, the co-CEO and the CFO, which CFO, obviously, there's been some research saying the CFO is the highest quality insider in terms of insider buying, or the highest signal insider. You've got the stock moving in the right direction, some decent momentum behind the stock. Again, hard to, valuation, met data and stuff, I don't know quite as well for this industry, so not much for me to add on there. But this guy's got a pretty good, or lady, I don't know, has a pretty good history of buying the stock, a couple of dips here. Obviously, maybe in obviously didn't time this one well, but besides that, got some short-term pops on most of their previous purchases. If we look across the time frames, we can kind of see, 8% on average, 1 month returns, 18% 3 month, 27% 6 month, though the win rate starts to drop as we get a little longer, and is really, I think, really buoyed by the COVID dip, which is always the one time frame when you're looking back over the last 7 years or so, looking at the COVID and just making sure how much of their returns are buoyed by just buying a bunch of stock during COVID, which in this case is certainly the case. The only upside of these insiders buying during COVID is that the next dip, if you see the same people buying during the next dip, that's a pretty good sign that they like to buy the dip. So I think Dynex is a little more interesting on the REIT side, just solely based on the CEO's buying here, and a decent history of, especially over the shorter term, properly timing, which direction the stock's going to go. But again, not an industry I personally prefer, so not super interesting to me. One other one over here, what that could be interesting, obviously here at Duluth, we've got a huge, in terms of percent returns, somebody with really good timing. If we look back historically, looks like the returns probably aren't actually even from Duluth. Let's see if we can see where I guess that's the only trade. So in the 3 months, yeah, I guess basically this June, July, August, September. So yeah, so they were able to get, a lot of this is going to be because they crushed their most recent earnings, which I'll mention down here. They crushed earnings obviously around September 4th. Stock went up 50% or something like that, which really contributed to the returns. But it is interesting to see her still buying the stock. Again, the CFO buying the stock now post the stock pop here. I don't know if anybody has been selling after this pop. So yeah, it looks like she's been the only one buying. So this would be one. I actually haven't looked too much into this one because I believe I guess we can go look real quick. Just trying to build a story here. I'm not 100% sure what, it's up 8% again today. I'm not 100% sure what the story would be now post upgrade after earnings or post the stock return after earnings. And just kind of historically looking at like the EV EBITDA, I think we're a little bit on the high side here in terms of valuation, which just historically speaking, trying to buy companies that are on the higher end of their historic EV EBITDA is a little bit of a tough gamble. It doesn't tend to turn out too well. Just as a baseline, it has worse returns than if they're buying their stock when it's undervalued. But I think if you wanted to look more into this, I'd go read through the transcripts and just try to figure out exactly why was the stock up so much, and then is there something, sales were even down, it looks like, so they must have just made a lot more money. Improved adjusted EBITDA, so top line coming down, and yeah, I'd go look through this just to figure out maybe, so they're going through a turnaround, it looks like. See if you agree with that turnaround there, but to me, it's not the most interesting. Something that is a little more interesting to me would be the Cooper companies here. I think this is probably the most interesting one of the day. Also, pretty large company, which you don't normally see a ton of interesting insider trades at, but this kind of sums up why this whole thing's interesting. It's just like insider buying back here in 2018 on the dip, insider buying here in 2020 on the dip, and now group insider buying down here on the dip again. They obviously missed this dip and they missed the COVID dip, which is kind of surprising, but literally the only times they're buying is when this stock is dipping, and they did it again right here. You've got 5 different insiders, it looks like. So we got no, that's the same person, director, president, or segment president, it looks like, the CFO, the CEO, and finally the COO. So 4 different executives plus a director all buying the stock. Pretty sizable increase in the holdings by the director here. Pretty good timing historically by the insiders. This is totally a turnaround play. So you do actually have earnings estimates heading in the right direction, even though the stock is not heading in the right direction. Obviously, very negative momentum, and they just kind of, just like every earnings, they just sort of miss over and over and over again, which is obviously not what you'd like to see, and what you're hoping doesn't happen now. The insider buying, you're hoping would signal the end of these insider misses and dips. If we look historically, unlike Duluth, where obviously, the metrics were a little messier with Duluth, but it was maybe more expensive. This one is pretty clearly just like trading at, kind of whatever multiple you choose to use, which again, you probably use EV EBITDA in this case, but just very, very low multiples going on here. Now, there are concerns if we look at some of the growth stuff. Revenue growth has probably been on a slight decline here. There are some growth concerns. There's some tariff concerns. Those are probably the 2 main ones. Just checking my notes here to see if there's anything else that I had mentioned. Yes, yeah, so just some lower organic growth and tariffs are the big concerns here. But obviously, I think the insiders are signaling like, hey, we're probably kind of, we've been beaten down enough here. We're trading at all-time low EV EBITDA multiples. We're going to figure this out and turn things around. And I think their history would suggest that they tend to time that pretty well. So I think this is probably the most interesting insider purchasing that has gone on today. Clear turnaround play, and just hoping to see, no more of the earnings gap downs, and start to see some of the growth numbers return back to where they're hoping. And as we see, EPS heading in the right direction, EV EBITDA all-time low, bunch of insider buying. I think that's quite interesting. We can head over to take a look now at a few sales. Starting at the top here, we've got more selling at NVIDIA. That's been going on for a while. A bunch of 10b5-1 sales, obviously, by Jensen. Looks like some more, well, not some more selling, but in this kind of energy mining sector, we've seen quite a bit of selling recently. We've got a big sale here by insiders at Ivanhoe Electric. Seems like whoever was buying down here was timing. The execs were timing the buys pretty well, but this is just a big, again, these 10% owners are much lower signal. You have no idea why they might be selling, so I don't think it's super compelling, but obviously, $32 million is pretty large. Some more 10b5-1 sales we've been seeing for a while. Another 10% owner selling Tango Therapeutics, which they've been selling pretty consistently here, and as you can see, they have timed their sales pretty well. In this case, this might be a time where I would pay a little bit of attention to what's going on with a 10% owner, just because, they nailed the timing previously. The stock obviously went up a little bit in the short short term, but it looks like after about two months or so of selling, the stock then fell off a cliff. So this would be one. I haven't looked into this company too much yet, but just based on this would really be the only scenario I'd be interested in what 10% owners are doing when they have a history like they do or like Sava Capital does with Ace of Gold. I think can be pretty high signal. So a bunch of 10b51 plans here. Another semi-interesting one, a company that is, if we look at Hallador Energy here, obviously a hot sector, independent power, especially with the AI data center stuff. You know, any news about AI data center stuff and them powering it will continue to send the stock rising, but the stock is up quite a bit over the last year, 100% in the last year. Obviously, very strong momentum. If we go look at some valuation stuff, very, very high on in terms of their multiple. So getting pretty up there, though obviously earlier this year they were even higher, and the kind of the whole argument here would just be that top line growth and which has kind of actually fallen off a cliff a little bit here, but they're just one big like AI data center power contract away, or being able to charge way higher prices. You know, any of those two things could be a big inflection in their earnings, which would then obviously make their EV/EBITDA multiple not look too high and look more reasonable. But that's kind of it. It's a high growth, kind of high risk play in this industry. But we have now seen, and it's pretty expensive as we mentioned, but we've now seen a couple of insider sales here, both by the same guy. So, you know, I don't know if, you know, normally you'd rather see multiple insiders selling, but a pretty good track record on this guy, at least in the, you know, relatively short term. At the end of November, stock fell 20-something%, or at the end of 2024, stock fell 20-something% through the first part of the year. But then obviously the stock's been on a tear now for basically the last 9-ish months. The stock's been, more like 9 months. Stock's been just perfectly straight up and to the right. Looks like he's sold here, which again in the short term was a pretty good, as the stock's been pretty flat since then and even went down a decent chunk and is now selling again at these same prices. We did obviously have an insider buyback here who perfectly timed the dip. To me, this is like a pretty risky one. If you're looking in the oil and gas space or in kind of the power space, I think it could be interesting to compare, because we are actually starting to see quite a bit of selling by insiders in this sector. So it could be interesting then if you're trying to find some stocks in the space to maybe find some stocks that are either a little cheaper and or don't have insider selling going on. So in that case, or if you are somebody looking to short that space, I think, you know, maybe taking a look at some of the overvalued players where you're seeing some selling could be it's probably a good place to look, but nonetheless very risky. Obviously, the CFO at Interactive Brokers continues to sell at these prices. Obviously, if the market ever turns around and consumers decide to stop spending all their time trading stocks, then Robinhood and Interactive Brokers and the like are going to get crushed. Here's another one, again, a similar industry and this is what I've been saying, we're starting to see this kind of energy sector, just lots of selling. You're seeing stocks very strong momentum. In this case, though, actually their earnings estimates have been going the wrong direction, but lots of very strong momentum, well above the 200-day moving average. As we go look at some valuation numbers, all right, this guy's a little bit harder to kind of see what's going on, as well. Maybe if I just move it a little lower. So I mean, similar-ish to Hallador in that they were much higher, but the growth of the company has kind of helped the EV/EBITDA multiple to flatten out a little bit. But it's almost the exact same play, right? They're not, they don't appear to be as expensive as Hallador Energy was, but similar sector. Stock's been on a run, and now you're starting to see valuations get a little expensive and insider selling. I think it's all kind of part of the same story. In this case, I actually think this one maybe has a lower risk in terms of, you know, like some AI data center news coming out and the stock running, but you have, I think the insiders here don't have as good of a track record as we can see just historically speaking. Not as we look over the time frames here, the stock tends to go up after that insider sells, and then also this one time it buys very well but sells not quite as well. So it did kind of nail the peak up here, but all of these sales obviously nailed the bottom down here. All these sales don't have as good of return. So the Hallador Energy guy had a little bit better of timing, but again, we're seeing more of these sales in some of these energy companies, which I think is kind of interesting to keep an eye on. What else do we have? Anything else interesting here? A bunch of 10b51s. We've got a sale at, so this kind of selling, you know, just super consistent. There's not much, I don't think you can really glean anything from an insider that's selling that consistently. Micron's an interesting one. This one we've looked at before. As you're seeing, you know, they're obviously, you know, different companies, but we're seeing a bunch of selling at some of these, like Micron seeing a bunch of selling, Broadcom seeing a bunch of selling. You've got a bunch of selling at Nvidia, but then you'll remember we looked at Marvell Technologies recently, who has the total opposite. The stock has not moved at all, as we can see here. Stock is very, very flat. And then if we go look at the historical charts here, we look at valuations, trading at low valuations here, even though they're in a very similar space. price, as the Nvidia and the Marvel and the Micron and the Broadcom, but we're seeing insider buying at Marvel Technologies versus all this insider selling at Nvidia. If we just we'll just look at the charts real quick. We can end on this. All the just endless selling at Nvidia on the way up here, and then also at Micron, we are seeing some selling, starting to see some selling here. They're selling back in June, and then now starting to pick up again as the stock's been on a little bit of a run. If we go look at Broadcom, we also see quite a bit of selling at Broadcom. As the stock is, again, they were also selling quite a bit in June, which obviously didn't work out, and then we're seeing some more now up here on the spike. And then you go compare all of that to Marvel, and you've got big old buying by 4 different insiders, at this time. So I think in this case, it's another one of those similar to like the energy place. I think you can, even if you are bullish on a sector and you would never want to short a stock in a specific sector, I think you can start to maybe see at least where insiders feel that their company is lagging behind the sector a little bit and they believe they are worth more and might catch up. So if you're looking for, energy plays, or you're looking for semiconductor plays, it can be a decent spot to go. Maybe you pick a Marvel Technology over a Broadcom or a Micron or an Nvidia or something like that based on, the valuations and the insiders telling you like, hey, we're lagging behind and we don't think we should be. We think we're probably a better play than some of those other guys. So that can be another way to use this kind of insider data. And I think that'll be all for today. You can go to ceowatcher.com and look at all the insider trades for yourself. And don't forget to like and subscribe, and we'll see you next time.